All right, welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. Thank you very much for joining us. If you're just joining us, it's a Monday and we've got a lot going on, don't we? You know, you thought we got through last week's WASDE report and the PPI and CPI. No. India's got to let that news out over the weekend and shoot our markets a lot higher. Let's see how things are going right now and take a look at corn. What's corn got going on? Well, July's up 19.75 cents to 8.01. It's about 5 cents off the highs, 5.5 cents off the highs. Look at new crop D's, 12.75 cents higher at 761.5 now with 750 in that rearview mirror on the right side, right? How about soybeans? Let's take a look and see what soybeans are doing. Soybeans are higher as well. July's up 5.5 cents to 16.52 even. And we also have new crop up 11 cents to 15.09 and a quarter, well above that $15 level. How about Chicago wheat? What's going on there? Well, I've got an idea what's going on there, and that looks like limit up if you ask me. 70 cents higher in that July contract, 12.47.5 is last. We've got a 70 cent higher subcontract at 12.51 even. All right. How about the hard red wheat in Kansas City? What do we have happening there? And much the same, doesn't it? 70 cents higher in both July and SEP. July's last at 13.52 even, while we've got SEP at 13.53 3/4. We tail off a little bit going out to the defers, but still, that's a very strong board. How about spring wheat in Minneapolis? 58.5 cents higher in that July to 13.83.5. And we even go out to the D's, 58.5 cents higher to 13.71.5. So, boy, oh boy, we've got wheat on fire. We had a higher cotton board. Look at this. Just getting back to that 150 level. 437 points higher in that July cotton to 149.57. All right, let's bring our next guest analyst, Todd Horwitz from Bubba Trading. Todd, thanks for joining the show. How are things in Vegas, and what are your thoughts on these markets?
Well, things are great in Vegas, and listen, the markets are kind of what we expected, Scott. I mean, we thought they'd come back and rally back after the WASDE report, after a little bit of selling pressure last week. You know, again, we're going to have a shortage, and you can't stop the shortage. And there, you throw India into the mix, you continue to see Russia and Ukraine going at it, and that can only lead to higher wheat prices. And now, the commodity prices are rising because I think money's coming out of equities. So everything points towards much higher prices in the commodity space, and especially the grains.
How much of this will be dependent upon the economy doing okay?
Well, I think the economy is going to struggle, and if it was doing better, I still think we'd have higher prices because, again, we still have a supply-demand market, and it appears we're going to be short supply, and that's going to drive prices higher, which is usually the case. And so besides every other problem that we have, the shortage of supply is going to also trump, what's going on, and this is what we see. Yeah,
well, this food protectionism stage that we're in right now, where these other countries are doing the same thing, and it's a noble cause. They're trying to look after their own. It'd be nice if somebody did that here, but ultimately it proves that it doesn't really work out. It just makes supply chains worse, and it makes those shortages worse. It kind of exaggerates the problem. You know what I mean?
Well, I think exactly, and I think one of the problems that we see here is that we refuse to really do anything about our issues, which can be solved and handled very easily, but we choose not to do so, which creates even a bigger problem, and it makes those that might have been dependent or we would be dependent on a lot less friendlier to do those things.
All right, we're going to make you stay right there, or ask you to stay right there. We're going to go away, pay some bills, and come back and talk more with these livestock markets. Todd Horwitz, Bubba Trading in Las Vegas after this. All right, welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. Thank you very much for staying with us. If you've been with us all day, that's great. It's my job to make you stay. So let's take a look at what's going on with the live cattle. That live cattle board has been a little bit better here today. 132 better in that June contract, to 133.40. New highs here, folks. Ring that bell. And August is up $1.60 to 133.95, just off of the highs of 133.97. So that live cattle board gaining some steam here as we get a little bit later in the session. How about feeders? They've got to deal with corn, but they haven't been too bad. Look at this. We don't even really have a dollar loss anywhere across the board. So that's not too bad. We've got May. Let's go August. August off 57 cents to 167.45. Go out to the deferreds. Nova's off 82 cents to 174.07. But that's hanging in there pretty well, considering, or all things considered. Sorry, let's go to lean hogs. What's going on there? Well, we're tacking on to more of the gains that we saw on Friday. So look at this. June's up $3.07 to 103.82. And we've got July right behind it. That's up $3.70 to 104.90. So that's a good couple of boards there. We've got Feeder's actually hanging in there pretty well, considering. That's a good spot to bring him back in. Our guest analyst, Todd Horowitz from Bubba Trading in Las Vegas. Todd, what are your thoughts here when it comes to these livestock prices?
Well, I think the livestock is, I think cattle is having, live cattle is a little bit of a dead cat bouncer. I mean, we've been under some pretty heavy pressure recently, and feeders look pretty solid. And certainly we're not as surprised that there's some pressure today. I think hogs are the story. You and I talked on Friday that the 100 or the dollar level should hold. It did, and it's coming up very nicely off of that, and it's up almost limit this morning, and could run a little bit from here. I mean, I think that 100 is going to be like a magnet, and that's kind of the key point where they must always hold on the way back down. But certainly, with crude oil up about $3 today, I would not be surprised to see cattle come down a little bit further from where it's running to now, and see the hogs rise, because again, we're going to get back into the budget issue of the individual spender.
This crude oil, this is going to be a real thorn in the side of the Fed, because every time they keep raising rates to get out in front of inflation, or a lot of our inflation is energy based, and crude oil going up like this seems to almost cancel out all these rate rises. What do you think?
Well, 100%. But of course, Jerome Powell said the other day, well, maybe we made a mistake. Maybe we didn't raise soon enough. And of course, they're only 10 years behind the curve of when they should have started hiking rates. And this is going to be a problem. And how do you fight it now? The new plan is to, try to borrow your way out of debt again, which we know does not work. It's a false sense of security for 5 minutes, and then inflation starts up again. So this is a big mess that has to be dealt with, and of course we can deal with it if we just start pumping our own oil.
There you go. All right, really appreciate it. That's Todd Horowitz with Bubba Trading. He's in Las Vegas. Thanks for being on the show. We're back in Nashville, so I can throw this over to Janet.